Yeah, so post-COVID, the investment pattern has changed. Investment pattern has taken six key factors which helps the student to decide what they should do. And for this, they have found out that a new lifestyle has led to the new technology trend. Because of flexibility and innovation, the new sectors have emerged out. Wealth inequality could lead to the higher tax rate they have realized, higher taxes. The big businessmen would be able to stabilize themselves post-COVID very easily. But the smaller entrepreneurs are vanished away. ESG, environmental, social, governance has expedited its speed. Water and waste management sector, battery saver, technology sector, cyber security has increased its pace post-COVID. So many people have started investing into, from the very the big industry, big era, which was following pre-COVID, has changed into macro landscape. Ultra loose fiscal policies are taken care by the government. It is positive for those industries which are in chemical sector, which are in cloud infrastructure, precision medicine, pharmacy, maybe there are variety, the precision medicine, TV network. Imagine how many OTP platform had come into existence. Who knew about Amazon and a Prime Video and the Hotstar before COVID? They have started their own pace into the growth of an India. The positively affected factors as shown on the slides are especially utilities, food retail. Investors lobby, go for ETF, exchange traded fund. Instead of buying gold, they will go for buying the gold exchange traded fund. More for equities, more for insurance, more for, they wanted to buy the home, they want to buy the real estate, place where they can stay easily even if there is a lockdown. And the increasing craze for cryptocurrency is also there. Now, what is negatively affected sectors? Negatively affected sectors are paper industry because of everything online. E-wedding card, because of e-wedding card and everything online, e-digital, and every bill processing, GST payment, everything is increased during the post-COVID era. The result is that the paper industry is completely destroyed. Travel and leisure. They will take, the smaller travel and leisure person might take ages to recover the losses due to the COVID. But those industries will flourish only if some confidence is laid in them. If you start investing into those type of those companies also, then they will be able to cover up the losses due to COVID. Technology, hardware, transport and logistics, everything has suffered a huge setback because of the COVID. And so these are only my views, which are flourishing industry sector where you can invest into the shares, into the stock, into the debentures, into the government securities, into the Kisan Vikas Patra and the NSS certificate and a PPF. That is what is possible pre-COVID. Now people are looking for the pharma industry stock. People are looking for the food retail stock. People are looking for the education sector stock and all. Okay. Then the next we go, the very few things were to be before winding it up was a conclusion. And what is this conclusion? What you have, it's been given by the famous economist, that first you should learn to pay yourself first. That is the first lesson taught to you by the COVID. To get into the habit of saving money and treating it as a non-negotiable monthly expenses, pretty soon you will have more than just emergency money saved up, and you will have a retirement money, vacation money, and even money for a down payment of a home. This is what everybody sitting at home, working from home has learned. Pay yourself first. You should have a saving, whatever may be your goal, whatever may be the duration of your goal, whatever may be your target. Second thing, what they taught you is don't just sock away this money under your mattresses. Yes, that was very true. Don't hide under your hip of your dresses. Don't hide under the gulak. Don't keep it idle into your cupboard. But keep some emergency fund necessary that is taught to you by COVID. All other extra money, and that sum is a very relative. You should decide how much money you need into emergency. Keep that much money handy into your gulak, into your piggy bank, into your the heap of addresses. Everything else put into the liquid money. Put it somewhere. Let it be 500 rupees. Let it be 1,000 rupees. Put it somewhere. You get a Kisan Vikas Patra for 500 rupees. You get an NSS certificate for 1,000 in multiple of 1,000. Put it in a high interest online saving account or a certificate of deposit or a money market account. New money market mutual fund, triple MF, has come into existence post-COVID. Otherwise, inflation will erode the value of your saving. What I told you, what 25 paisa sandwich I used to eat, you are eating the same sandwich for 25 rupees. The quench to thirst, the quench of your hunger was a motto. At that time also, it was available for 25. And today also, when it is available for 25 rupees, the same motto is there. Same utility is there. But yet, because of the inflation, the value of the rupee is eradicated. Today, rupee 1 is always stronger than that one you found and tomorrow. The most important what COVID has taught you, that if you do not manage your money, other people will find out the way to mismanage your money. Simply, you cannot rely on a certified financial planner or a certified financial analysis. You can always take their advice. You can always refer them for the best guidance, but take your decision according to know yourself. How many days you want your money back? What is your criteria? Are you ready to take a risk? What is your risk appetite? What is your goal for the money, what you are saving it? And then only you to combine 80% of the advices given to you by the CFP or the SEBI registered advisor, the wealth analyzers or the certified financial analyzer, because their qualification, experience, and certificate will help you to have back from the zero investing to the process of 10% investing, but take a decision in context to you. Okay. Others may be well-meaning, but may not know what they are doing, like Grandma Betty, who really wants you to buy a house, even though you can only afford a treacherous adjustable rate mortgage. And those who give you the big dreams, buy the holiday home, and this much will be this, and this much will be this, but you decide what is your budget, what is your plan. Was this into your plan? And accordingly, you invest them. Don't jump into the pool of an investment. Everybody's saying, so let us buy the mutual fund, but understand what type of mutual fund suits you. The equity one, the debt one, or the balance one. And in balance one, there are so many other investment opportunity available to this for you to take a decision on it. Don't let anyone catch you off guard, whether it's a significant other than a slowly siphons your bank account, or a friends who want you to go out and blow tons of money with them every weekend. So conservatism has increased among young people like you post-COVID. They realize that they realize that the pandemic has taught them that the money is everything, is a lifeblood of organization. You have to make your money work as hard as you work for the money. You have to keep some emergency fund and let all money come out of the piggy bank and be invested. You have to check your investment, whether it is in the consisting media, health, or growing fund, it is an aggressive fund, aggressive investing strategy. And Once the portfolio is made, the changes in a portfolio which was before COVID and after COVID, you have to keep a tab of it. Is it growing the same way as you expected? Is a return the same way what you have expected post 1 year? And yes, last at the end, you are called millennial. So an advice to millennial investors, you have to perceive innovative companies. Don't follow the herd mentality. Find out from so many opportunities available on NSE, BSE, Sensex, to find out the undervalued firm. Study them. Do fundamental analysis, do technical analysis, give respect to your gut feeling, and play safely some of your money in an undervalued firm, which it is available for you for $3.99, but you're envisaging that it will grow within a few months in a time interval to $39,999. You should perceive the innovative companies with the strategic vision to adapt to this creative disruption. Don't crib post-COVID, this and that. Learn to face the destruction as more likely to outperform, reinforcing the risk-off stance towards more mature and less innovative companies. This is what is the future. You will be able to find out some new companies into the media, into the pharmaceutical, the precision medicines, and the utilities, and the food retail, and the education sector, even in the real estate sector. Find out the worth investing, divide the percentage investing into it. When the portfolio ready, go on evaluating at a particular time interval, because it is very relative. So a simple advice to my millennial: post-COVID, the investment pattern has changed to K-type. First, it was V-type. Follow the elders, follow the friends, and invest 50% into the safe instrument like debt and bonds and promissory notes, 10% to 15% into the volatile investment like equity, and the remaining amount, keep it idle, available to you whenever you want it. The conservatism, still follow the same thing in post-COVID, but the changes is that change your platform where you want to invest. Change the way you used to look into the investment. Find out the undervalued stock, invest them, give them the opportunity to come out of the crisis they're facing because of the COVID pandemic. See that your money is growing. Do the portfolio management and portfolio evaluation using the normal the formulas like the trainers and the Johnsons available. Let it be theoretical, but it will give you the right direction. So let your money work hard for you. Invest into the stock which are highly growing, 20%, 20%. Give a chance to those undervalued stock also, and invest into the stock market. The entire, from the total population of India, only 20% play in the stock market, which you should increase to make India have the good GDP higher than the one it was in the pre-COVID era. Thank you. I hope my lecture was fruitful. It was very nice talking to the students. I was expecting an interactive session. We'll be looking forward for your question and answers. We're sharing my email ID with the organizers of the Stargate Foundations, and I'm always welcome for your questions if you have further. Thank you.
Thank you, ma'am. It was very informative, and I'll upload and share you the link of the video. It was very informative.
Yes, thank you.
Thank you once
Thank you. Thank you for giving me opportunity. We'll be always looking forward for the same.
Yeah, sure. Thank you, ma'am.
Yeah. Stop sharing my. I will leave the meeting. Thank you. Sudanti, Hardik, Yash, and Raj.